Hey everybody, it's Kathy Boyle. I'm president of Chapin Advisors. Today we're interviewing another member of our Circle of Influence. Our Circle of Influence has been designed to allow you to find experts in a wide variety of fields and services. When you need an expert, oftentimes we're in a hurry and we reach out to a friend, grab the person they use, and sometimes that's a giant mistake. Making a mistake with an expert is expensive in terms of time and money. I don't know anyone who has either to waste, so let's get it right the first time. So today we're interviewing Tommy Ammons with Envoy Mortgage. This is especially pertinent given the volatile times we're in. So if you're looking for a mortgage, a refi, to relook at your finances on buying a new house, whatever it is, Tommy's the man. So Tommy, let's talk about Envoy versus the Chase, HSBC, the cities, the big banks. What's the main difference between a boutique firm and the large banks?
Hi, Kathy. Thanks for having me, and great question. So at Envoy, yeah, we are a smaller and more nimble company. We're able to really adapt to the changing environment, which right now it's happening quite quickly. But we handle everything in-house. So we're a direct lender as well as a broker. But predominantly what we do, we underwrite in-house, issue our own commitments, and fund our own loans. And by doing that, we're able to keep everything in-house, which allows us to expedite the underwriting and closing of a file. Given the current times, we are adapting and moving to an e-closing platform, which is allowing a lot of our borrowers to close from the comfort of their home. And we're working in conjunction with a lot of title companies that are using Zoom and other apps to virtually notarize documents and so forth. So we have that flexibility. We are able to work remotely as well in this environment. Everything is online and digital in terms of documentation that is needed or transferred. So fortunately, in our line of work, we are able to continue to move along, and we haven't really been impacted that greatly with everything going on.
That's phenomenal. So I know that that's not true with the large banks. I've worked with both, and I've had some real disaster situations with some of the bigger banks with dragging their heels and the thing taking forever, which does not make my clients very happy campers. You're also licensed in all 50 states, correct? So you can handle it, even though you're in New York,
Yes.
you can handle clients.
I mean, the company's licensed in all states. So I'm licensed in about 10 different states individually, but certainly can help with all 50 states if the client has a second home, vacation, or investment property that they are interested in.
Wonderful. All right, now let's talk about the need for your all the documentation, including your firstborn son. How difficult is it? What's the process like nowadays?
Great question. The process actually has gotten a lot better than from 10 or certainly 20 years ago. Everything is pretty much automated. We have online underwriting systems where we run basically a borrower's credit. We take their financial information, we run it through the system, and based on the findings, we're able to typically verify a minimal amount of documentation. By that I mean verbal verification of employment. We may need 2 pay stubs, a W-2, and a bank statement, but a lot of times we're able to verify this all electronically. We can verify employment online, income online, assets as well. So the documentation's become very streamlined. It's a small amount that we would need. Everything could be sent via email with copies, and as well as appraisals. A lot of appraisals we're able to get either a appraisal waiver, whereby we don't need an appraisal on a property. And in some cases now with what's going on, we've been able to do desktop or drive-by appraisals on certain properties that are needed. So we really streamlined it down to where there's a minimal amount of documentation that's needed from the client. And if we can get the property completed without a full appraisal, that makes it a lot easier and also saves the client money.
That's terrific. All right, let's talk about rates. Rates have been all over the board in the last couple of weeks. How much have rates moved, and what's the advantage, again, that a firm like yours has in terms of being nimble?
Yeah, great question. Rates have been extremely erratic, probably the craziest 2 weeks I've ever seen as long as I've been doing this. So rates have moved all over the place. I mean, as a matter of maybe 2 weeks ago, I saw 30-year fixed rates at 3% or slightly under. And in a matter of a week, they probably moved up a full percent within 5 days. The Fed made another announcement last Sunday, and we saw a small improvement or a glimmer of hope that first Monday, and then rates just shot up again following that. So I'd say rates are probably on certain types of, certainly on the jumbo market or the higher end, rates have not necessarily corrected or come down to where they were a couple of weeks ago. We have seen on the conforming side and a lot of the Fannie or Freddie backed, government backed loan sizes, those rates are still pretty competitive right now. But on the non-QM jumbo sector, there just isn't an appetite for that right now, and therefore it's reflected in the rates. And I'd say in some cases, the rates have gone up 2%.
Wow, that's a lot of big difference. But let's talk about the difference between a home equity line of credit, a HELOC, and a cash out refi. What is the difference and what are the advantages of one versus the other?
Great question. I've been getting a lot of inquiries on this lately. So the home equity line of credit is a variable rate of interest. It's basically like a cash access line or credit card against your home. Typically, they have a 10-year draw period and then a total of a 30-year amortization. So 10-year draw, 20-year repayment period after that initial 10 years of draw period. During the 10 years, you have an option of interest-only payments during the 10 years, and you can draw those funds and repay them as much as you want. The lines of credit are based off of prime, currently 3.25, and they typically run anywhere from prime minus to prime +1, typically is where most rates are on lines of credit. So the key thing to note with the line of credit is that it is a variable rate of interest. It can go up and will change as prime rate changes. Right now, we're at a low point, but the likelihood is that it will eventually increase. But people do like to have that as a cash access line or cushion should they need it in an emergency situation, or they might want to use it for home improvement, college, retirement planning, things like that. A lot of people like to set that up. Versus a cash out refinance is basically taking out a new mortgage on your home, typically paying off an existing first mortgage, or maybe you're consolidating a first mortgage, a line of credit, and some credit cards, but it's a fixed rate mortgage. So if you're doing a cash out refinance, and some people are tapping into the equity in their homes just because rates are so low right now. So you're utilizing that and taking a fixed rate mortgage of a 30-year at 3.25, 3.5, a 15-year in some cases was 3 or even under that. They actually have a need for that money right now, and they're taking a lock rate of interest and setting that for the term.
Got it. All right, last question. I'm a first-time home buyer, or I'm getting divorced and I've got to put a down payment on a condo. What do I have to do? Is it 20% down? And what are what's available?
Another great question, and common misconception these days is that you do need 20% to meet that conventional standard, and it's just simply not the case. There are plenty of lenders out there, plenty of options to put down less than 20%. I have plenty of first-time buyers that are doing 5 and 10% down. They're getting very competitive interest rates. There's options out there for buyers to purchase a property without PMI, which is private mortgage insurance, which is typically required anytime you put less than 20% down. We do have a lot of lenders out there that are able to offer financing without PMI at an 85, 90% financing. So there's plenty of options out there for first-time buyers, whether you have excellent credit or buyers that maybe have less than perfect credit. There's FHA financing out there for first-time buyers that allows a 3.5% down payment, and you can actually finance all your closing costs. So for a buyer that has the income, the job history, but maybe just doesn't have that down payment saved, they are able to buy a house with a very minimal amount down.
All right, that's great. Last question. How do I find you if I want to reach out to you about my financing needs?
Best way to find me, you could reach me as my cell phone is 914-329-5562. You can text, email me, call me. That's always the best way to get me. My email is tammons, TAMMONS, @envoymortgage.com.
Terrific. We're delighted to have you in our circle of influence.
Thank you.